On average, 8 out of 10 customers will pay more in insurance premium than they will claim over a 3-year period. Now, consumers place a lot of value on no-claim cashback rewards, and they've become a regular feature of the insurance landscape. There's no doubt that no-claim cashback rewards can be a valuable benefit to someone's finances. Nonetheless, it's important for consumers to realize that they can have more control over their insurance rewards through solutions that benefit them continuously, and not only at the end of a no-claim period. For more on this conversation, we're joined by Mutoda Mahamba, the CEO of Solvency. Mr. Mahamba, a very good morning to you. Thanks for joining us and a warm welcome to Morning Live.
Good morning. Thank you very much for having me, and good morning to the viewers and listeners.
Good to have you on the show this morning. How can one save when it comes to insurance?
Well, as you mentioned, 8 out of 10 people over a 3-year period will claim less than they've paid insurance premiums. So there's something magical about the 3-year number. And I always advise people that, it's worth testing the market every 3 years, especially if you have been claim-free.
Now, is it possible to reward a customer by looking at how much they have claimed relative to the premiums that they have paid?
Definitely. It's a short real-life story. A lady had been claim-free for 26 years. 26 years she had not claimed, and the first time she had a claim, her insurer paid. 4 months later, somebody bumped into her, and the insurer then said, "Sorry, you're a bad client. Please find alternative insurance." Now you can imagine that's 26 years of paying premiums, and with just 2 small claims, the insurer says, "No, you're a bad risk." And this is where we say that we need to change the narrative, because that's what makes people disgruntled with insurance. Get people, as long as they pay more than what they're claiming, reward them every year. Reward them every year.
Who needs to change the narrative? Because some say that the insurance company actually have a higher power than the consumers.
Well, I guess that's why a company like Solvency, which is a fintech that I started up, decided to do that. Because for the longest time, I had been the guy that does all the actuarial calculations to determine who should leave the insurance company, what increase should we give to somebody who's claimed. And I decided that no, it's time that we actually reward people who are behaving in the correct manner. And so that's why you find that a startup like Solvency and other startups out there, we are trying to change this narrative and make sure that insurer is consumer focused and not just one-sided, where the insurer is the only one that benefits.
Do you want to share a bit more on how you reward behavior or good behavior?
Sure. What we've done is that we allow you to take a portion of what would have been your insurance premiums. For example, an average person pays about 1,000 Rand in insurance premiums. So we can allow you to allocate up to 45% of that into your own insurance savings account. So think about a medical aid where you'll have a medical savings account. It's the equivalent for short-term insurance, where a portion of your contribution goes towards your insurance savings account. Now, that insurance savings account, it belongs to you. It doesn't belong to the insurer. You can use it to fund your excess in the event of an accident. Every 12 months, you can withdraw up to 50% of whatever is sitting in there, whether you've claimed or not. And more importantly, because it belongs to you, anytime you choose to cancel your Solvency product, we pay the savings balance immediately into your bank account.
So on what grounds can you then claim for a reward, and how much are you likely to get from your insurance?
Well, it's numbers, but I'm saying if the average person pays 1,000 Rands, it means that over a 4-year period, they would have paid 48,000 Rands. Let's just make numbers simple and say 50,000 Rands, because the average person claims once every 4 years. So you would have paid 50,000 Rands in premiums, and I'm saying 45% of that, up to 45% of that, which is like, call it about 25,000, could have gone to your insurance savings account, and you could have then been able to fund the excess that you needed to fund. And so that really talks to the 8 out of 10. Certainly for the people that are multi-claimants, the numbers will not work out. But I'm looking at it and say, how do we help South Africans who are not able to save seamlessly? How do we help South Africans to make sure that their Rand goes the extra mile? And I'm saying that continue what you were doing. Continue paying the average 1,000 Rands of premium every month, but you'll find that almost half of it now is going into an insurance savings account, and now you are saving seamlessly. We insure and you save.
And how do the years add value to your no-claim reward?
Well, you see, because that is the fallacy that we challenge. Because we're saying that, even if you have claimed every year, it shouldn't matter. What should matter is the fact that over time, you are paying more in premiums. So unlike other models out there, we don't wait for you to be claim-free for 3 years in order for you to participate in this thing. Every year, you are able to withdraw up to 50% of whatever has been put into your savings account. And we're only putting it at 50% because we still want you to have something in the event of an accident that you can use to actually contribute towards your excess. Because South Africans, and this is the unfortunate reality, when you have an accident with your insurer, even if it's a 3,000 Rand or 4,000 Rand excess, people resort to a credit card or a loan in order to fund the excess. And we're saying that there's a better way to do it. Pay your insurance premiums as you would have, but now at least you are insured and you are saving, which can also then open up doors for you to do anything you want with your savings because it's your money.
Now, Mutoda, will the increasing access help lower your monthly premiums? Is that even advisable?
You see, and no, well, traditionally it should, and it does. And that's what we say, because what we say is that depending on the excess that you are willing and able to pay, so our maximum excess is 10,000 rands. So at 10,000 rand, that's when you can allocate up to 45,000 or up to 45% of your premiums. So instead of reducing your premium, rather take part of that and put it into your insurance savings account. So we are not cheaper, we are not more expensive. We still price you for what would have been commensurate with your risk. But this thing of taking a 15,000 Rand excess or 20,000 Rand excess just to reduce your premium puts you in a spin, because ultimately when the claim does happen, then nobody's got 15 or 20,000 Rands lying around.
So when the premium is reduced, is it, the reduction, is it commensurate with the retail value or the value of the car?
Correct. On a monthly basis, we do review the retail value of the vehicle, but in as much as then we don't necessarily reduce your premiums, but in this case, that difference is actually going into your insurance savings account. And this is the beauty about ensuring that customers are able to do both, because in a pure traditional model, except for maybe for a king price, which reduce the premium as the value of the car depreciates, in our case, we're saying rather the money is going into your insurance savings account.
Okay. Now, do share tips on what to negotiate on when looking for an insurance for any of your valuables.
Look, this is a question that people always get asked. And I say, look, ultimately, there is no such thing as cheap insurance. Because ultimately it all depends on your risk profile. The things that, however, you can do is to ensure that, does this product suit my needs? Does this product suit my needs? Because do I want to save, or do I want to just be insured by a big insurer? Those things don't matter. Ultimately, all insurance companies like ourselves, we are underwritten by New National Assurance Company, which is a registered financial service provider and a licensed insurer. The regulator ensures that all insurance companies are able to pay valid claims. So that's what matters, that this is a very regulated industry. There are no fly-by-nights, and the regulator will ensure that premiums are paid, and that claims are paid. So the tip that I can only give is that do not just sit there and, year after year, accept renewal terms. Test the market, and you might just find that you might be able to save because maybe a particular insurer like ourselves, we are saying that for as long as you know that you've been paying more than you claim, on average, we should be cheaper. Somebody might say that we target women, and maybe if you're a woman, they might be cheaper. So just test the market out there and, forget the stereotype that says this is a big insurer, they'll pay. Almost all insurers will pay because they are regulated to hold sufficient capital to pay claims.
Okay. Mutoda, yours is a very interesting proposition that, I know that so many people would love to engage with you. And how do they engage with Solvency?
We are a fintech, meaning everything is digital. So you can go onto our website, www.solvency.co.za. Click the Get Quote button. Within 3 minutes, you've got your quote. Within 3 minutes, you can be signed up. No paperwork, no 45-minute call.
Sure.
www.solvency.co.za.
Thank heavens by that no 45-minute calls. All right, Mutoda, great chatting to you, man. Thank you so much for your time.
Thank you, brother.
We just spoke to Mutoda Mahamba, the CEO of Solvency, on ways that consumers can actually save more when it comes to insurance.